Hello everyone, welcome back to my channel. My name is Hissham and today I'm going to talk about the order block, which is also known as supply and demand zone. In today's video, I will also discuss how to identify the order block and how we can trade them to make money. So without wasting any time, let's get started. What is an order block? An order block is a defined area where the buyers or sellers of smart money or large institutional money enter the market and move the price away from its consolidating price level to a new area of interest. If price is moved up from a low consolidation, then this is considered a demand level. Vice versa, if price moves down from a high consolidation, then this is considered a supply level. Now, why does it work? The market is engineered by smart money by means of creating levels of interest within the market for them to use at a later date. The same theory applies to the likes of support and resistance, as these levels give traders and investors an idea of safe areas to enter or exit the market based on previous consensus of other trades. I will give you an example with the diagram. Then after that, I will show you a couple of examples on the chart as well. So this is our consolidation area, and let's assume the buyers say they want to push the price in the upward direction and break this consolidation area. So before they break this consolidation area, you will see the higher low before the big impulsive move. So the bearish candle before this big impulsive move, that will be your demand area, and I will show you this on the chart as well. And vice versa, and if they want to break the price in the downward direction, so before breaking this consolidation area, you will see this low high and the price in the downward direction. That's a big impulsive move. So before that big impulsive move, you will see the bullish candle. That will be your supply area, which you can use at the later day to trade. Now I will give you example on the chart as well. Let's delete this. Yep, so I have already drawn the some supply and demand area to give you an example. So let's start from here. This is your demand level, and I will zoom this so that little bit consolidation here. You see here there's the bearish candle before it breaks this consolidation area. This is our demand zone, and it confirms once the price breaks this consolidation area, comes and retest here, which confirms that this is the valid demand zone. The price moves up and it comes back here for the second time. You see it touched the demand zone area and pushed up, and the price start consolidating here. So this is our second demand area which I have drawn. You see here this is a small consolidation area. That bearish candle, this is our demand zone, but I will consider this whole area as a demand zone. It's everyone preference. Some people they mark the whole area as the demand zone. Some people they just make this area as a demand zone. Some people they only consider this wicks as your demand zone. So it's up to every individual person how they want to draw their demand zone. So there is no like fixed rule for that. You have to do the back testing which works best for you. Okay, so this is our demand zone, and to confirm this demand zone, you see the price comes here once, twice, and rejected from here. 4, 3, 4, 5, 6. 6 times price comes around this area, get rejected, and finally the buyers they're successful to move the price in the upward direction. So when you get the chance to trade this, so when the price comes here gets rejected, that's the first confirmation, that's demand. Second confirmation, so you have two confirmation, and you see there's a bullish engulfing here as well. You have the three confirmations here. I don't know how many confirmations you require. That's totally up to you, depend on your trading plan as well, but that's enough for me. If I have to trade, I will put my long here. Let's move this up. Yep. So I will put my trade here and the stop loss will be below this area, and this is my supply area. Okay, so before setting the target I will tell you how I selected the supply area. So there's the bullish move here, and you see there's the big impulsive red candle. That bullish candle before that big impulsive red candle is our supply area, and it confirmed later on as well when the price come and hit this area. And let's delete this. Yeah, so the price comes this area, hit this and gets rejected from here and come down, fill your orders here. So you can sometime like trade the supply and demand zone multiple times as well. So that's the reason I have selected supply area. So I put my order, stop loss below previous structure, and that's my target profit. So still giving me the 2.35 risk to reward. For me it's really good. My minimum risk to reward is 1:2, or you can call it 2:1. And the second time you see here, when the price comes around this area, this, you can fill your bags here and trade the same way, or you can set your alerts around this area. Once your alerts get hit, it will give you the notification. You can come and see if the momentum looks good. You can let the trade run. It's totally up to you and depending on your trade plan as well. So if you want to continue the trade, you need to identify the next supply level where the potential target should be. So in this case, this is our supply level. The reason to select the supply level is, you see before the market dumps here, there was a consolidation area, and that's the bullish candle before the dump. So I will mark this as supply level, and I will select this as my next target. So this is my next target, but what I will do also, I will move my stop loss up just in case if whatsoever reason I will not be in front of the computer and the market dumps. At least I will lock some profit here. The other way, I will take maybe 50% profit once my target hit here and let the other 50% run. So that way I can maximize my profit, but that's totally depending on your trading plan. Make sure guys you make your trading plan, because it will help you to stick with your plan and you know what you have to do. Anyway, I will give you a couple of more examples so you guys can understand the demand and supply zone. I have drawn this demand zone here. So you see here there's a consolidation here, and before that impulsive candle, that's the bearish candle. This is our demand zone, and it confirms by retesting on this demand zone as well that this demand zone is valid. And when the price comes down here, it gets rejected here, so it confirms that again that this demand zone is still valid. Gets rejected, pushed up and consolidate here, and before that big impulsive red candle, you see there's the bullish candle. So this is our supply zone here. So the price dumps here, get rejected from the demand zone, which is telling us that the demand zone is strong, and gets rejected here once, pull back a little bit, but the candle closed in their supply zone. For me, their supply zone is invalid now, which is telling me that the price will soon break in the upward direction. For some people, they want the candle to close outside this zone for the invalidation. So again, it's up to everyone trade plan. For me, it's invalid. See here, price comes down here, that demand zone is very strong. So one, two, three, third times get rejected here, and price moved up, candle close again in this supply zone, comes here, here's the price. But as long as the price or the candle close above this demand zone, for me they're still valid here. Yeah, that was a little bit tricky here. So when the candle close like the 50% or more than 50%, for me in my trade plan, that is my invalidation. But in this case, you see here, it's not, that's a 50% of the zone. For me, it's not invalid. That's a perfect example of invalidation. The candle closed more than 50% inside their supply zone, and you will see later on that the price start heading up, breaking this supply zone. Obviously, the two times candle closes up in this supply zone area, so that supply zone is invalid, and I have already discussed this with you. The same way you can trade this area as well. Put your orders here, sell below the supply zone, lock your profit, and trade profitably. Once again, guys, before we go, I want to mention that whenever you are taking your trades or setting up your target for the trades, please consider this as supply and demand zone. It will increase your win rate because these supply and demand zone are used by the institutional money or the big money. So obviously you want to ride the wave with them, not against them. So whenever you are riding the wave with them, it will increase your win rate definitely. That's it for today, guys. Hope you guys understand this supply and demand zone and you learned something from this and use that in your trading plan. It will definitely increase your win rates. If you guys have any questions regarding the supply and demand zone, please leave that in the comment section below. I will answer all the questions. If you find this information informative, guys, please subscribe my channel, like my video, and don't forget to share it with your friends. See you next time.